Hello and welcome to BQ Prime. A very good morning to all the viewers. I am Hiral Dadia and you're watching Trade Talk. It's going to be an interesting day of trade with two IT majors that have reported numbers, Infosys as well as HCL Tech. Clearly, Nifty IT did underperform in yesterday's session as well, with all constituents barring one ending lower. In fact, it was Infosys that actually pulled the IT index lower as well. And if you see the way the ADR has been performing, that has been under pressure, down nearly 6% as we speak. With that, you had TCS earnings also, which disappointed the street with Q2 revenues missing street estimates. Now, taking that into consideration, if you see the kind of impact in terms of markets, uh, the earnings season, as we said, has kicked off, and the markets are seeing a choppy trade with the way the IT numbers have panned out. Clearly, a 120-point range is what we are seeing Nifty trade within, and pretty much it was unchanged in yesterday's session. It's interesting to see how the broader markets have been outperforming the benchmark indices. In fact, the small cap index actually ended with gains of around of a percent, and that probably is telling you that there is some bit of positive sentiment that is actually present in terms of where markets are concerned. In fact, yesterday was weekly expiry, and we ended on a flattish note, down almost 17 points, little below the 19,800 mark. 19,794 was the close. Now, in terms of sectors, media emerged as the top gainer as well. And there is a possibility with the IT being the top loser, selling pressure in IT is likely to continue in today's session as well. In fact, Infosys and TCS, both of these counters actually saw some short development in trade yesterday. But let's see what Gift Nifty is also indicating. Clearly, the numbers do tell you that it is a negative opening that is expected. And you have HDFC Life Insurance that will be announcing its Q2 FY24 numbers. But let's shift focus to IT as a whole because that's going to be where the wave of the market is going to be. And it's going to tell you where the markets are going to go. Tushar, who tracks IT pretty closely, is joining us to discuss with us as to what's the trend that is emerging. Tushar, good morning. Clearly, couple of points that we need to discuss over here in terms of IT, specifically Infosys and HCL Tech, where Infosys is of major focus. Firstly, both of them have gone ahead and lowered the guidance. Let's start off with that and we will continue the chat with other points as well. What does that actually tell you?
Good morning, Hiral. Both the companies, the second largest Infosys and the third largest HCL Tech, have reduced their guidance. Infosys for a second time consecutively. So now it expects to grow at 1 to 2.5% as compared to 1 to 3.5% estimated at the end of Q1. That too was a revision from 4 to 7% that the company had pegged at the end of the previous fiscal. HCL Tech, with all the blockbuster deal making that it has had, up $2 billion Verizon deal in Q2, it still reduced its guidance to 5 to 6% from 6 to 8% earlier. What is happening is that the large deals are coming in, but these are spread over several years. What these companies need, what gives them those quick returns, are the discretionary spending, which is not happening because of the macro overhang in the US. So the pain point is very evident now, and it is, according to these two companies, it's going to persist for the rest of the fiscal as well. Here.
Right. So, Tushar, overall, you're talking about from the guidance perspective. Yeah. And what could transpire. Now, clearly, it's giving you an indication that the kind of deal wins that we've seen, that's not really translating into the revenues that it should have. Is this a impact of the lower, discretionary spends that we're seeing in the US markets as well?
Exactly, totally. So what is happening is that because there is a macro overhang in the US, there is high inflation, there is high interest rates. So enterprises are not willing to spend so much on technology. They're taking a cautious approach towards their spending. They're waiting for this overhang to lift, which is why the discretionary spending is not coming in. Yes, for example, for companies like Verizon, who have to do their technology business, they are giving those deals, which are large, which is about $2 billion, say, for example, in the case of HCL Tech and Verizon. Those are coming in, but they pan out over several years. So their impact on a quarter is minuscule, so to speak. Whereas the small discretionary spending, maybe your $5 to $10 million deals or up to $50 million deals, those are not coming in, which will give you which get done quickly and they give snap returns. So if that is not there, you don't see the impact of those blockbuster deal making in the books of the companies.
Right. And Tushar, with that, the last question or the last point I want to discuss with you is that yesterday IT was the top sectoral loser, but there was some bit of resilience in terms of the quantum of fall. And
Yeah.
specifically with regards to TCS, probably it's the buyback that did come to the rescue to support the stock price. Now, you're already seeing Infosys ADR, which is trading under pressure. We're seeing cuts of almost 6% there. Uh, is there an expectation in the market that the cuts could be deeper, number one? And number two, the trend from here on, whether the discretionary spends will pick up from the
Mhm.
first quarter of calendar year 24 in the US, that is something
Mhm.
that we will have to eye.
Yeah. So, two things here. The first one, let's talk about this discretionary spending first. You asked me later, but let's talk about discretionary spending first. Now, the third quarter, or that is your October to December, is traditionally the weakest because there are furloughs and there are holidays in this quarter in the US. Second part, the latest FOMC minutes have shown that the likelihood of a shallow recession in the US is still minimized. Uh, the US is going towards 2% inflation target. The country may not see any more rate hikes. So that raises the likelihood of deals coming back in the early part of 2024. Now, these companies have already guided for a smaller revenue growth in for the rest of the fiscal. So, effectively, if there's no shallow recession, if some discretionary spending starts coming in, if some confidence starts coming in the clients, then some impact will start seeing in FY25, not before that. In terms of the buyback, there is likely to be more deeper cuts because TCS may have been supported by the buybacks, but say, for example, our Infosys and a Wipro have already affected such tools or used such tools to shore up their stock so far. Hiral.
Right. Thank you so much, Tushar, for giving us the details. And this is going to be an interesting one to watch out for as well. The pressure, as per what analysts are saying, is expected to continue in terms of IT as a sector today overall. However, we did speak to the management of Infosys. Now, on the dichotomy of record deal wins amid a muted revenue guidance, Infosys MD and CEO Salil Parekh says that the clients are continuously trying to cut or stop discretionary work. Let's listen into what he had to say in detail.
On the digital programs and on the discretionary work, there's a continuous attention by clients to reduce or to stop them. So that's where we see the impact on one side of the revenue. On the other side, there's a tremendous interest in cost, efficiency, automation, where we happen to have a huge advantage in the market, where we believe we are gaining market share by winning so many of these large and mega deals. Many of these deals have time as they start to ramp up, the way that they are structured, the way the transitions happen. We see those ramp ups, those scaling up of the large and mega deals more out into the future, back end of the year, and as some of the new deals are coming on beyond that. So those are the two dynamics that we see. And then we combine that. We were fortunate and we executed a very strong quarter, as you rightly point out, and we will continue to execute. But we are also aware and we want to make sure that we communicate that or what the environment looks like. And things in that environment change in a dynamic basis. So we want to make sure that that gives the range of what our guidance communicates.
That's the management of Infosys. Now let's see what transpires with regards to where markets open in the next couple of minutes as well. But moving on, apart from IT, you have pharma as a sector that will continue to remain in focus. Probably we will term it as the pharma and the IT day as well, taking into consideration the kind of news flow that has come in a lot of stocks. Monal is tracking the same pretty closely. Monal, good morning. Which are the stocks that will be in focus, which could see some bit of a reaction in trade today?
Morning, Hiral. Yes, a lot of action on the pharma stocks, and we could see quite some reaction, especially with Glenmark Pharma. So last evening, the company said that its wholly owned biotechnology subsidiary in the US, Ichnos Sciences, has entered into an agreement with Astria Pharmaceuticals for commercialization of its OX40 antagonist monoclonal antibody portfolio, which is essentially used for treating atopic dermatitis. So the idea is that it has licensed its both its assets under the portfolio, which are for inflammatory and immunological diseases. And Astria will assume full cost and responsibility for the global development and commercialization. Now, for this, Ichnos, which is Glenmark's subsidiary, will receive up to $320 million, which is close to 2,700 crore rupees in upfront and development and sales milestone basis. And this is in addition to a low double-digit royalty. Quite a huge amount that now that we look at it. Also, if you remember recently, that's just in September, Glenmark Pharma had sold 75% of its stake, turning into a net cash company from a net debt company. And this is another big news for the company. So we're hoping for a turnaround and some stock reaction on that front. The other news here is that US FDA has inspected two facilities. One is Dr. Reddy's biologics manufacturing facility in Bachupalli, Hyderabad. This was a pre-approval inspection and was concluded with 9 observations. Now, usually a pre-approval inspection does not have any impact on the existing revenues, but it could potentially impact the launch pipeline. However, details on the launch pipeline from the facility are not clearly available. Then we have Panacea Biotech, which was also inspected by the US FDA, and the inspection was concluded again with 9 observations. This facility is its wholly owned subsidiaries facility in Baddi, Himachal Pradesh. And the company said that these 9 observations are related to improvements in existing procedures and are addressable. We also have a couple of approvals and tentative approvals, one which Lupin has received for its oral solid drug, and one, there's some improvement in terms of the clinical stage trials by Sun Pharma. So quite a bit of news on the pharma front. Hiral.
Thanks, Monal, for getting us the details. So yes, Dr. Reddy's as well as Panacea, both of these will be closely eyed in terms of what the kind of pressure it could put in terms of markets, but the others could see some bit of a positive reaction as well. So pretty mixed bag is what we are going to see in terms of pharma as a sector. And to be noted that with regards to Dr. Reddy's as well, as Monal was mentioning, that the pipeline is not known yet, but clearly, the company will be given 15 days time to submit its response to the US FDA as well to explain what steps it will take to resolve the observations that have been made. So there will be further developments that could come in as well in terms of one of these names as we speak. But clearly, if you go to see interesting space to watch out for. Moving on, a lot of other news items that will be in focus, a couple of earnings that have come in as well in terms of, the mid-cap and the small-cap companies. Let me get in Mihika to get us more. Mihika, good morning. Firstly, let's break it up into 2 parts. The first part talking about which are the key earnings that will be in focus in today's session, or, what stocks could be reacting.
Good morning. So first we have Angel One. On the earnings front for the Q2, all the numbers passed the Bloomberg estimates. Revenue was up 40.6% at 1,047.9 crores, and the net profit was up 42.62% to 304.5 crores. Then we have Kesoram Industries. Revenues were up 12% to 953.8 crores. EBITDA was up 32.54%, and margins also improved to 7.2% versus 6.16 a year ago. They did report a net loss of 58.37, which is slightly lesser than the net loss last year of 59 crores. They also reported that sales volumes were up 16.9% to 3.73 million tons for the half year of FY24, and EBITDA was up 57% at 216 crores. Then we have Anand Rathi Wealth. Revenue was up 34% to 182 crores. Net profit was also up 34.29% at 57 crores. And their assets under management grew 33.8% to 47,957 crores. So that's what we have on the earnings front.
Right. So clearly a 34% rise in terms of Anand Rathi, a good one to look out for, as well as Angel One, who is now going to offer unsecured loans soon as well. And a good surge in terms of profitability is what we're going to see. So some bit of positive reaction on both these names can be expected. But Nika, apart from these, you have been tracking a couple of other counters as well. We did have a ITBI that is in focus on the BQ Prime exclusive news that we have picked up. To start off with that, let us know what is the news and which are the other stocks.
Okay, so in terms of the BQ exclusive, Prem, WhatsApp, Fairfax, which is Kotak Mahindra Bank and Avenue Capital, are among the preferred bidders for IDBI Bank. The bilateral meetings with potential biddings have been ongoing for several months now, and the government looks very closely to IDBI Bank sale process by the fiscal end. IDBI has also hiked the 2 to 3 year MCLR by 10 basis points and overnight to 1 year MCLR by 15 basis points. In terms of the rate hikes, we also have Bank of Maharashtra, which revised its 1 year MCLR upwards to 8.7% from 8.6% previously. Coming to the other stocks, first we have the aviation sector. The DGCA reported its September 2023 report. Air passenger traffic was up 18.3% to 1.22 crore for the month. Indigo is now maintained its position with the highest market share of 63.4%, which is up 0.1% month on month, while Vistara stood second in terms of the highest market share at 10%. The highest passenger carried was also by Indigo at 77.70 lakhs in the month of September. The overall cancellation rate for September stood at 0.92%, and Delhi airport was the most punctual airport, while Mumbai was the least among the top 4 airports. Then we have JMR Airport Infrastructure. The September passenger traffic was up 23% year on year, and air movements were up 14% year on year. In terms of passenger traffic growth, the Philippines airport reported the highest growth of 57%, followed by Hyderabad at 21% and Delhi up at 14%. Then we have Zaggle Prepaid Ocean Services, which was entered into a $20 million growth agreement with Visa Worldwide. The agreement is for the next 5 years, and it aims to further their alliance in support of the issuance of the Forex co-brand cards. The company will leverage its existing users and offer these Forex cards to the employees. Then we have IRB Infrastructure Developers. The company via its subsidiary IRBI Infrastructure Trust has executed definitive agreements with affiliates of the Singaporean Sovereign Wealth Fund GIC as financial investors, and the SPV Samikhyali Tollway to implement a 2,092 crore Samikhyali Santlapur BOT project, which is a tollway project in Gujarat. The trust will acquire 99.96% in STPL for a total consideration of 116.2 crores. Then we have Angel One. They also reported that their total orders rose 36.1% quarter on quarter for the second quarter of FY24. The company added 2.1 million clients in quarter 2, which is the highest in any quarter. And the board also recommended an interim dividend of 12.7 rupees per share. Then we have SJVN. The SJVN Green Energy got an LOA from Rajasthan Urja Vikas Nigam for the development of a 100 megawatt solar power project. The project is worth 600 crore rupees and is to be executed over the next 18 months. And the project will be developed on a build, own and operative basis. Then we have Aditya Birla Fashion and Retail. The company will invest an additional 75 crores in its subsidiary Aditya Birla Digital Fashion Ventures via partly paid equity and preference shares. The board has approved a limit of 50 crores for the equity share issuance and a limit of 25 crores for the preference share issuance. And last, we did have a bulk deal in 36-1 WAM. Norges Bank bought 32.76 lakh shares, which is equivalent to 0.91% stake in the company for 511.2 rupees per share. And Morgan Stanley sold 24.42 lakh shares, which is equivalent to 0.68% for a share price of 511.2 apiece too.
Right. Thanks, Mika, for getting us the details. In fact, lots to watch out for in terms of stock-specific action in today's day of trade. And two sectors that we will have our eyes on is IT as well as pharma. Pharma could be a mixed bag, but IT clearly could see a good amount of selling pressure in today's session as well. Very lastly, couple of earnings that will be in focus today. You have the likes of Den Networks, HDFC Life, Tata Steel Long Products, Sai Silks, Som Distilleries, all of these names that will be reporting numbers. So please stay tuned to BQ Prime. On our website, you will keep getting updates on a regular basis. Completely out of time. That's all that we have in this session. Up next, we will get you Omkar Taksale to discuss about how the stocks could open in trade and what could be expected going ahead from Infosys, HCL Tech, as well as the sector as a whole. You're watching BQ Prime.